In this lesson, we're going to look at another management technique, which is short-term aggressive management. Now, in the previous lessons, we already looked at short-term management, which is pretty simple. It's just following the 1 hour 50 EMA, looking for a trend change and the break of the 1 hour 50, right? Then we have the long-term management, which is following the 4 hour 50 EMA with your stop loss, looking for a trend change and the break of the 4 hour 50, right? Which is a little bit more long-term. Now, we've also went a little bit deeper in that long-term management lesson because we can take that same concept and apply it to the higher time frames, such as the daily chart, following the daily 50 EMA. And that will be much more of a longer term kind of management approach, but it's the same concept. It's following that daily 50 EMA, looking for a daily trend change, break of the daily 50 EMA. Now that's a very super long-term management approach that if you manage based on the daily 50, I mean, you will be holding for months and months and months. So the most common management approaches will be short-term management and long-term management following that 4 hour 50 EMA. And unless you're very, very long-term, then the daily 50 EMA kind of thing. Now, those two management approaches are pretty mechanical, meaning that there's not much discretion. You're not really making any decisions, rather except for choosing which management style you're going to be applying, right? Because otherwise everything is pretty straightforward. You're just trailing your stop loss below or above that 1 hour 50 EMA or that 4 hour 50 EMA, looking for a trend change, and if that EMA is broken, you exit. It's pretty straightforward, right? And that's what I mean. There's not much discretion. It's all technical, right? It's all mechanical. Now with short-term aggressive is different. It is fully discretionary, right? So you typically start off utilizing one of the management approaches, whether it's short-term management or long-term management, right? So you always, whenever you execute a trade, you choose which management style you're going to be utilized. And that's what you choose, the management that really fits your personality, whether it's a short-term day trader, whether it's more of a hybrid or a swing trader, right? You choose the management style that fits you whenever you execute the position. So that's what you always start off with. However, once that trade is executed and let's say it explodes massively to the upside in your favor, right? And you're running at a really good profit, and that there's that just big separation between the EMA and price action, right? And you just don't want to hold that pullback that could potentially drop and break that 1 hour 50 EMA or that 4 hour 50 EMA. By holding that big pullback, you could lose a lot of profit, right? Let's say you could be running at 5%, and if it pulls back to the 1 hour 50 EMA and breaks that 1 hour 50 EMA, you could exit maybe for 2% instead of 5%, right? So there are certain characteristics that you can look for and then make a discretionary decision, right? To use short-term aggressive at that point and exit the trade for your max profit at that point, which would have been like as an example, 5%. Now I'm going to explain that fully on the charts, but I just want to say that that is a fully discretionary management approach. The ones that are most common and the one that you will always start off with will either be short-term management or long-term management. And then when the position is live and you are ready to take profit, then you can utilize short-term aggressive to do that. So that's it for this little intro. I'm going to jump on the charts. There's a really clean trade here that I want to explain as well, and then I will focus on that short-term aggressive management approach. Let's have a look. So like I said, there's a really clean setup over here from all the way from the higher time frames, the monthly, the weekly, the daily, and then the 4 hour chart and the 1 hour chart, right? This is kind of what I would consider a holy grail setup, which we'll actually be looking at holy grail opportunities in the next season, right? So after you watch that, you might want to come back to this example here, to this trade, and have a look again, because this is a holy grail example. Let's have a look at the higher time frames first, before we actually look at the lower time frames and focus on the management approach. Let me explain this whole position for you, just so you can have a full understanding of what's going on. So when we look at the higher time frames here, and you quickly glance at it after going through the strategy lessons, you can see that this is an advanced breakout on the higher time frames. We have this wedge on the daily chart, and if you look at the Elliott wave theory, wave 1 breakout, wave 2 pullback, wave 3 run, it's the biggest run of them all, right? Wave 4 pullback, and then wave 5 run, and it's decelerating within this price action pattern. Let's see how the Elliott wave theory, how it actually lines up with Fibonacci retracement and so on. So wave 1 breakout, wave 2 pullback to 0.32, pretty clean, fit so far. Then we use our Fibonacci extension and came so close to 1.272, which is the potential target for wave 3 run, right? So it came very, very close to 1.272. So Elliott wave theory is fitting perfectly here so far. Let me remove this and draw in the next wave. So wave 3, wave 4 pullback, pulling back again beautifully to the to Fibonacci extension, and then wave 5 run should be at 0.618. Boom, beautiful rejection of 0.618. So you can see the Elliott wave theory is lining up beautifully within that daily trend, right? So it's just another example of utilizing the Elliott wave theory, Fibonacci retracement, and Fibonacci extension for your pullbacks and your targets, right? So again, it's another beautiful, perfect example here. So we can perfectly see here now that after going through the Elliott wave theory, we can see that wave 5 has come to an end. We've already hit 0.618 Fibonacci, which is wave 5 Fib extension target, right? So that's already been hit. Everything's beautiful here on this daily chart, right? Now, I'm gonna come back to this daily chart after I look at the higher time frames. So when you look at the monthly chart here on the top left, the monthly chart is pretty simple. We have support and resistance. So previous high, previous low, and then we have deceleration. Now at the time of the entry, the previous month actually closed as a beautiful lotus reversal, rejecting the support. That's about it on the monthly chart, right? It's pretty straightforward. Support, deceleration, low test, that's it. Now we need multi-time frame confirmation, but it obviously shows that there's going to be some bullish pressure coming here on this monthly chart from this support and this lotus reversal, right? And at this point you can even see once the trade was closed, you can see that even a tweezer bottom formed here on the monthly chart. So this can definitely continue going farther. Now multi-time frame confirmation is when we look at the weekly chart now, we can clearly see that we have that same support level on the monthly and we have it on the weekly here, right? So beautiful support, another support, more support, and support. Now you can see that we were here on a bullish, within a bullish trend, and now we have broken down to the downside. So we are potentially starting again some bearish pressure here. So this is just a weekly pullback. The entry occurred right here after deceleration on that support level. So we have that confirmation. We have support, we have deceleration, right? We have this kind of wedge, but that wedge is much more defined on the daily chart. But we have deceleration and candlestick formation. Now this is a pullback play. So what's the potential target here? Obviously the 20 EMA, but the main target would have been 0.3 to Fibonacci and the weekly 50. Now we go farther to the daily chart, again, multi-time frame confirmation. The daily chart, like I've already explained, has a perfect 5-wave Elliott wave theory pattern, and then deceleration within this falling wedge. Zoom out, we will notice that we have again beautiful support and resistance, multiple rejections, same level as on the monthly and the weekly. Then we have a double bottom off of that support level with an inside bar and this big strong bullish pressure, right? So this is where that trade was occurring. Now this is an advanced breakout, right? So knowing, after going through the advanced breakout lessons, knowing that advanced breakouts are more advanced, they're a little bit more aggressive, this is just an example of an advanced breakout on a higher time frame. So it's literally the strategy itself playing out on a higher time frame. The same patterns, it's the same technique, they will happen on a lower time frames. The strategies will also occur on the higher time frames. So this is an example of the strategy occurring on a higher time frame. And that's what I meant by a holy grail, right? We will talk about the holy grail setup later, right? After we finish the management lessons. But it's pretty much applying the same strategy to the higher time frame and to the lower time frame as well. So when you look at the charts here on the daily chart, what is the best target for an advanced breakout, right? So if you look at the weekly chart, right, typically an advanced breakout on a lower time frame, you will be targeting the 4-hour 50 EMA, which is the middle time frame. So an advanced breakout on a higher time frame is the same concept. You could target the weekly 50 EMA and 0.32 Fibonacci. That's it, right? So that's it from the higher time frames. That is the setup. That's the potential of this opportunity here on a higher time frames. It's a pretty good trade. But again, it's an advanced breakout, so it's a little bit more aggressive. But this goes farther. So we continue with multi-time frame analysis all the way down to the lower time frames. And 4-hour chart, right? We have pretty much a breakout and a retest of the 4-hour 50 EMA. So this is a CBO setup, right, on a lower time frame. Advanced breakout on a higher time frame, CBO on a lower time frame. So we were in this bearish trend, and then we broke out past that 4-hour 50, and then came back to reject that 4-hour 50 EMA. Perfect, beautiful, right? Let's go farther. 1-hour chart. Same thing. We were in a bearish trend. We formed that double top, and then we started that bearish trend to the downside. We bottomed out, higher low, higher high, higher low. It was looking still kind of messy here. It was kind of like an IBOC setup over here, but again, kind of smashed right through that 1-hour 50 EMA, so it wasn't as clean, but then it exploded massively to the upside, fully breaking out, breaking the trend line, breaking past that 4-hour 50 EMA, and now what was once support becomes resistance, right? So check it out. Beautiful deceleration on the 1-hour 50, 0.32 Fibonacci, 4-hour 50 EMA, right? Everything is here, deceleration, bullish engulfing. I ended up taking this as you can definitely take it as an entry order because there's so much higher time frame confluence here, and it's a pretty clean lower time frame. There's barely any doubt, right? We have a beautiful higher time frame, we have a very clean lower time frame. So if you wanted to, you could execute this as an entry order, or you can definitely wait for a live entry. Doesn't matter, right? It's really up to you. You can enter with a order or wait for a live entry. So this as an order would have been executed obviously at entry would have been at 0.32 Fibonacci, like we've already seen from the previous lesson. So entry would have been at 0.32 Fib, which is just a little bit above the 1-hour 50 EMA, a little bit above the 4-hour 50 EMA, and a little bit above 0.32 Fibonacci retracement, right? So that's the entry. What is the stop loss on the CBO setup? Well, 0.618 Fibonacci, right? So that's the stop loss, 35 pips. Entry right there, stop loss 35 pips. Now what is the most optimal target? So like I said, from the higher time frames on the weekly chart, what are the levels to watch? The 20 EMA. But the main target could have been 0.32 Fib on the higher time frame. So we could go 0.905, right? Just a little bit below. So this is where I exited, but if we took it all the way up to 0.905, this would have been an 8% position, hence a holy grail, right? Because a typical day trade, you're not going to be catching a day trade for 8%, right? It has to be kind of this holy grail setup where you have the strategy applying itself to the higher time frames as well, right? Which gives you this massive, beautiful long-term opportunity because there's something beautiful on the higher time frames, right? So it's a longer-term trade. It's more of a swing trade kind of thing. Executed as a day trade, hence a holy grail. But yeah, so that's the potential of this trade. So now comes management. So obviously the entry was executed, whether it's an entry order, like it's presented here, or a live entry right after this beautiful bullish engulfing on a 1-hour chart. It ended up breaking the 5-minute 50 EMA, so that could have been a live entry. At that point, the 4-hour chart also had a low test. So very, very clean trade. Doesn't matter which way you really decided to execute this position. It's very, very clean. Now, you can see that on the 1-hour chart, I also have Fibonacci retracement and Fibonacci extension put in, right? So you can see that was beautifully rejecting 1.272, and that's when I utilized short-term aggressive. But before I get to that, how would you manage this trade, right? So at this point, you need to decide when you're entering this position, right? When you're going live, when you're planning this trade, you need to decide which management approach you're going to utilize, because the trade is clean. You're taking it anyway, right? But which management approach are you going to utilize? You have to pick either short-term or long-term. 1-hour 50 EMA, 4-hour 50 EMA, right? What are you going to use? So in this case, it can be pretty simple because you can choose, well, if you're a day trader, more short-term approach, you can manage based on the 1-hour 50 EMA. If you're more of a swing trader, longer-term approach, you can manage based on the 4-hour 50 EMA, right? So let's say you're choosing to manage based on the 1-hour 50 EMA. This is a CBO, right? So the 4-hour 50 EMA is already protecting your position. But as that trade is going up, check out, I have the stop loss line on the 5-minute chart. So if you follow the cursor and you kind of look at the 4-hour chart and the 1-hour chart, when it fully clears, right, moving your stop loss right here would have been way too tight, right, at this point in time, because it can just come back to that 1-hour 50 EMA, come back to that 4-hour 50 EMA and stop you out for no reason. This is a beautiful trade on a higher time frame. There's a lot of potential here. This would have been choking the position, right? You want to wait for it to really explode before you start moving that stop loss up. So you can move it up a little bit, but you want to make sure it's well protected initially below the 4-hour 50 and the 1-hour 50, right? But then once it started to explode here, right? So once it exploded to the upside, well, at this point, you can start trailing your stop loss, right? Because it's already moving, it's already popped, so you can move your stop loss to just above your entry price, and then you can continue to move it. And if you're using the 1-hour 50 EMA as management, then you're literally just trailing that 1-hour 50 EMA. Every single day, you would be adjusting that 1-hour 50 EMA, adjusting your stop loss based on the 1-hour 50 EMA, right? So as price is moving up, you're locking in profit. Right now, we have about 2% locked in, right? And then price continue to go further the next day, so you move it up even more. Over here, you probably have about 3% locked in, right? And then, yeah, we would finish right there. So we have about 3% locked in, and at this point, running at 160 pips, 4.5%, right? So you can stick with short-term management like this, or you have an option here, because check it out. If you look at the 4-hour chart, we have deceleration. We have this massive bullish run to the upside, and we have deceleration, hammer, high test, bearish high test, tweezer top with beautiful candlestick formation. So what could we get here? We could get a big 4-hour pullback, right? So where could that pullback go? All the way up to 0.382 Fibonacci. So even if it goes to 0.382 and we're using 1-hour management, we would get stopped out, right? So that's fine, it's cool. If you choose to utilize that approach, it's totally fine, right? But if you want to push this further, then maybe it would not make sense to have your stop loss there. It might be too tight, because you can realize that, yeah, 4-hour chart could pull back, reject these previous highs, reject 0.382 Fibonacci, and continue higher. So if you want to push this further, then maybe it would have made more sense to utilize the 4-hour 50 EMA as management, right? If you wanted to push it further. Now, to push it further, you have to realize that, okay, well, now your stop loss needs to be here because you're managing based on the 4-hour 50 EMA, and you're only locking in 1% instead of 3%. But at this point, if it does pull back, you're protected, right? It can still reject 0.3 to the previous highs and continue going further. This level, 887, at this point on the 12th of December, 887 on the 12th of December was right here, so you can definitely even just pull back, reject that daily 50 EMA, continue going farther, or just pull back, reject those levels on the intraday charts and continue going farther, right? At this point, we've already broken out to the upside. But the question is, do you want to hold it all this way, right? So if you utilize 1-hour 50 EMA, you'll get stopped out. It could still potentially go up. That's the thing. You'll get stopped out for 3% if it rejects this level, but it could definitely still continue going up. So you could be happy with 3%. That's great. It's 3%. 3% is a really great return. But if you utilize the 4-hour management, right, then it could obviously continue farther down, and who knows what could happen at that point. Chances are it would still continue going up. But if something happens, if a news announcement drops and Canadian dollar gets stronger because of that news announcement, then obviously you could just get stopped out for 1% profit. It's still profit at the end of the day, but you were running at nearly 5% there, 4.5%. So to go from 4.5 to 1, maybe you would not want to do that, right? So this is where short-term aggressive comes in. And if you look at the price action, now you can see it's perfectly decelerating on that 4-hour chart. We have a tweezer top. If you look at the 1-hour chart, we've already been within this trend. We made this massive run. And look at that, it's rejecting 1.272 beautifully. So now we could have that wave 4 pullback, and then it'll probably continue into wave 5 run, right? But you can see it's stalling at that 1.272. Tweezer top, bearish engulfing, and at this point, I decided to exit that trade, right? Which was roughly, let me just go back here, which was like right there, you know, roughly 4.5%. So that would have been a short-term aggressive management approach. It's you looking at all the factors here and making a discretionary decision. You see, that's a discretionary decision, saying that, okay, you know, it's running at 4.5%. Yes, I'm targeting 8, but it's running at 4.5%. It's looking great, and I'm happy with 4.5. It's decelerating, it's slowing down. I think there's going to be a big pullback coming in because of the candlestick formation on the lower time frames and the fact that it's already rejecting 1.272. It could very well pull back to that daily 50 EMA, and at that point maybe I'll enter again. But at the same time, it's already rejecting some levels. It's decelerating on the weekly chart. It's already sitting at the weekly 20 EMA as well, but it could obviously still continue going farther. But that is, you take all those factors and then you decide whether you want to exit, lock in that 4.5%. 4.5% is great, right? There's nothing wrong with doing that. However, one thing is you don't want to utilize short-term aggressive when you're below 3%, right? Short-term aggressive should be 3% and up. If you're making that discretionary decision, lock in at least 3% profit. That's my tip to you, right? Is to at least be exiting for at minimum 3%. When you're making a discretionary decision like that and you're only exiting for 1 because you think it's not going to go any farther, like if you exited right here, utilize short-term aggressive right there, exited for 1%, then I mean, that's a waste. It's a waste of an entry. It's a waste of a beautiful higher time frame, right? And that is an emotional decision, right? Because at that point, that would have just been fear talking. Here I have reasons. It's already made a massive move. It's sitting at the weekly 50. It's sitting on 1.272 Fibonacci extension on a 1-hour chart. It is decelerating. And I'm already sitting at 4.5%, right? Which is already a great return. And if you're trading a big account size, 100 grand, that's $4.5 thousand. $1 million, that's $45,000, you know? So that is already a big return, which is a really great return. So short-term aggressive, you can make the decision to exit the trade at this point. And that's what I ended up doing. Now, the negative with short-term aggressive is obviously you're not waiting for that breakdown. It could very well just bounce off the 1-hour 50 EMA and continue going up, or it could just continue going up. What happened here? So if we fast forward, right, that's the benefit, right? That's the benefit of short-term aggressive, is just locking in profit. You're happy with it, you lock in profit, but just know that that's more of a discretionary approach. I love it. I utilize it once in a while. Majority of the time, I will be sticking to my short-term management or long-term management, depending on the position and the style that I want to utilize. But once in a while, short-term aggressive like this is great. You know, just to lock in profit, move on with your life, and 4.5% is great. But that's why I say minimum 3%. But what happened here? So I exited the trade, boom, it continued to go high. Let's see if it even pulls back. No, look at that. Exploded massively to the upside, and that's the negative, right? Is that just can continue to go up. Now we have a double top on a 1-hour chart, and what will happen? Boom, break of the 1-hour 50 EMA. So if you decided to hold it, again, the main target would have been at 95, which is weekly 50 and 0.32. That would have been 8%. That would not be hit, right? That's still much higher if you look at the cursor on the 1 hour chart, because I'll just fast forward on the 1 hour time frame. We hit highs right here of 9,000. So about 50 pips less. So that's the high that we hit, and then double top. So, and then it broke the 1 hour 50 EMA. And when it broke the 1 hour 50 EMA, it pretty much broke at the exact same level that I exited, right? So you could have very well utilized just short-term management and have exited for the same amount of profit, right? But again, I wanted to drop this management style here because sometimes literally you will exit, you will see this beautiful deceleration like this on a lower time frame, you will exit and then it will just fall. And if you did not exit, you would have potentially just banked 1% profit, which is still good, right? But now you have options. So that is it for short-term aggressive management approach. You can see that it's beneficial, right? But it's discretionary. But as long as you use the tip of only exiting for a minimum of 3% profit, like here it was 4.5% profit where I decided to exit, right? And I had many confluence reasons to actually exit that position. But obviously there were still reasons to hold it further, right? Because it was a beautiful higher time frame setup and so on. So you could have just stuck to that short-term management approach or long-term management approach. It's really up to you, right? But all options are great, and you just have to make the decision yourself to choose which option you're going to utilize. And if you're using short-term aggressive, be assertive, be confident, and just take that profit and stick with it. If it continues to go up, oh well, you banked 4.5%, which is great, right? The thing is, if it continues to go up, a lot of people have FOMO, fear of missing out, and then they'll say, oh, I made an emotional decision. No, you did not. You exited for 4.5% because you had various reasons to exit, which is a correct decision. So that is it for management, short-term aggressive management. We've covered it all. Short-term, long-term, short-term aggressive. Now you know how to manage positions, and I will see you in the next lesson. Take care.